Friends, welcome to this amazing video today, where we are going to talk about the deep, powerful, and reality-based summary of the awesome book, How to Make Money in Intraday Trading, by one of India's most famous, most respected, and most honest traders, Ashwani Gujral. Today's summary will change your way of thinking, because intraday trading is not glamorous. It is a battlefield. And in this battlefield, only the one who understands discipline, psychology, patterns, and timing wins. Ashwani Gujral has clearly written in his book, Intraday trading is not anyone's ancestral home. The market tests newcomers every day. And with this mindset, we will deep dive today. If you think that in intraday trading, your money can double in 2 hours, then you are already on the wrong path. Ashwani says, intraday is not fast money. It is fast discipline. You win in the market when you learn when to trade, when to avoid, when to accept a small loss, and when to ride the momentum. Intraday trading is not a game of emotions, ego, and guesswork. It's a game of setup, plus pattern, plus timing, plus discipline. And if you want to master this game, this video can prove to be a turning point for you. Now let's get to the real summary. 1. Market open. The most dangerous time. Ashwani Gujral says, market open is the place where beginners die. Why? Because in the first 15 to 20 minutes, positions are adjusted, news is digested, FIIs begin hedging, rapid volatility occurs in options, liquidity jumps. Therefore, Ashwani's first golden rule: never trade the first 15 minutes unless you're highly experienced. Beginners should first observe the market as it stabilizes. Market open only shows one thing: right arrow madness, mad volatility. But trading requires right arrow discipline, calm decision making. 2. Trend is everything. If you don't understand the trend in intraday, everything is over. The biggest rule of intraday trading: trade with the trend, or don't trade. Ashwani explains that intraday trading is based on 2 things. 1. Which direction is the market going? Trend. 2. When to take a trade in that direction. Timing. In intraday, every successful trader follows the trend. How to identify the trend? In the book, Ashwani relies most on 200 EMA right-pointing arrow, overall bias. 20 EMA right-pointing arrow, intraday direction. Price structure, right-pointing arrow, higher highs/higher lows. Market breadth, right-pointing arrow, advance/decline. Sector strength, right-pointing arrow, which sector is leading the market. If the trend is up, only look for buying opportunities. If the trend is down, only look for shorting opportunities. Counter trend trade equals suicide. 3. Momentum. The real money in intraday is in momentum. Ashwani Gujral has a very powerful quote: intraday traders get paid for catching momentum, not for predicting reversals. Where do beginners lose the most? In catching reversals. Market is falling, right-pointing arrow, they will look for the bottom. Market is rising, right-pointing arrow, they will look for a level to short. But what is the truth? Play button momentum makes you win. Play button reversal kills you. How to identify momentum? In the book, Ashwani suggests strong wide-range candles, volume explosion, important level break, decisive break of VWAP. Both sector and index are aligned. RSI above 50 for strong buying momentum. RSI below 40 for selling momentum. Momentum is only powerful when price moves are accompanied by volume movement. 4. Money management. The most difficult but most essential rule in intraday. Ashwani says, intraday is not about finding the best trade. It's about surviving long enough to find the best trade. And survival is possible only with one thing: money management. According to the book, risk no more than 1 to 2% on every trade. Stop loss is mandatory. Loss is small, profits big. Position sizing is the most crucial part. Ashwani's one unbeatable rule: an intraday trader's primary job is to protect the capital. Profit will come later. First, you have to learn how to survive. 5. Avoid noise. News, Twitter, tips equals loss. Ashwani has written this very strongly. Trading opinions kill traders. The basis for decision-making in intraday should only be your setup, your chart, your entry/exit plan, your rules. News, TV experts, WhatsApp groups, right-pointing arrow, all are intraday killers. Why? Because intraday moves with speed. If your mind is confused, equals your money will be lost. Intraday trading is play button reaction to price, not prediction based on news. 6. Types of traders. And who loses the most? In the book, Ashwani describes 3 types of traders. 1. Impulsive trader. Trades every move. No plan. Emotional. 2. Analytical trader. Overthinker. Looks at 20 indicators before taking a trade. Misses the trade. 3. professional trader. Limited setups. Quick execution. No emotions. Follows the trend. Focused and calm. Ashwani repeatedly says, successful traders are boring traders because they don't want excitement. They want profits. 7. Best intraday setups. Ashwani's special setups. Breakout/breakdown trades. Pullback continuation trades. 80/20ths principal trades. Moving average bounce trades. Gap up/gap down trades. There are 3 common things in every setup. Trend. Volume. Important level. Friends, welcome back. Now we have come to that part of this summary where we will talk about the actual trading setups. The setups because of which Ashwani Gujral is counted among India's most successful intraday traders. These setups are not simple, they are battle-tested, and Ashwani developed them from decades of market experience. If you understand these setups well, your intraday journey will be based on truth, not on tips, guesses, emotions, and luck. Let's start. 1. Breakout and breakdown, the most powerful intraday setup. Ashwani says, most intraday money is made when price breaks a level with force. Breakout occurs when the price breaks a strong resistance. High volume comes in. The candle is large and wide range. Both market plus sector are strong. Breakdown occurs when support is broken. Sellers dominate. Volume suddenly increases. Now the entry rules. Checkmark. Wait until the breakout candle closes. Checkmark after the close. Let a narrow pullback occur. Checkmark entry when the next candle breaks the high again after the pullback. Why? Because the chances of a fakeout are high after the breakout candle. SL, stop loss. Just below the breakout candle low for long. Just above the breakdown candle high for short. Profit rule. Ashwani says, momentum trades die young. Take profit aggressively. Targets in intraday are not at big distances. They depend on speed. 2. Pullback continuation setup. The safest trade in a trend. This setup only works in a trend. Suppose the market is in an uptrend. Price moves. First leg right pointing arrow, pullback right pointing arrow, second leg. It is here, in the second leg, that the highest probability entry is found. Ashwani explains, when to entry, price gives a slight pullback to the 20 EMA. Volume dries up, RSI stabilizes at 40 to 50. A buying candle forms again right pointing arrow entry. For short trades, RSI pullbacks to 50 to 60, then collapses right pointing arrow entry. Why does it work? Because in a trend, institutions do not just buy once and sit, they build up again on pullbacks. 3. The 80/20th setup, Ashwani's favorite. This is the most highlighted setup in the book. This setup triggers when price is in a range 80% of the time. The market is choppy. Suddenly, price moves out of the 20% zone, right pointing arrow momentum explodes. Ashwani says, 80% of the time market does nothing. 20% of the time it makes money trades. Meaning, 80% of the time the market is sideways. Only 20% of the time do you get money-making moves. Entry rule. Sideways range is forming. Forceful breakout/breakdown from the range boundary. High volume. Strong wide-range candle. This setup is perfect for beginners because checkmark, stop loss is tight. Checkmark target is quick. Checkmark moves are fast and clean. 4. Moving average bounce, the magic of 20 EMA. Ashwani Gujral gives the most importance to the 20 EMA in intraday. Why? Because in intraday, institutions make major buying/selling decisions right at the 20 EMA. How to trade it? In an uptrend, price goes up, then a slight drop to the 20 EMA. Small candles, wicks, indecision at the 20 EMA. Then, a bullish candle, close right pointing arrow entry. Reverse rules in a downtrend. SL. Slightly below the EMA. If the EMA is cleanly broken, right pointing arrow exit. 5. Gap up and gap down setup, the fastest money. Ashwani says, gap is emotion. Emotion creates opportunity. Gap up means buyers rushed in as the market opened. Gap down means panic selling occurred as the market opened. But not every gap should be traded. How to identify a valid gap? The gap should be above an important level. Gap up. The gap should be above the previous day's high. The volume should be very large. Gap up long setup. Market opens right pointing arrow strong wide range candle. Sellers attempt but cannot close it down. Price holds above the previous day's high. Entry as soon as a 5-minute bullish candle forms. Gap down short setup. Reverse rules. Now let's move to the most crucial part. 6. Position sizing. Intraday saves or sinks. Where do the biggest mistakes happen in intraday trading? Over leverage, random lot size, taking a big position to recover a loss. According to Ashwani, position size is more important than strategy. Rule: risk only 1 to 2% of capital in every trade. Lesser quantity in highly volatile stocks, bigger position in trending stocks, reduce size in choppy markets. Ashwani's golden formula: respect the capital, and the capital will respect you. 7. Stop loss, the holiest rule in intraday. Ashwani says, stop loss is not optional. It is oxygen. Why? Because in intraday, speed is fast. Reversals are sudden. News impact is immediate. Liquidity is high. If there is no SL, right pointing arrow wiping out the account is guaranteed. Ideal SL, slightly outside a technical level. Not random, according to candle structure. 5 to 10 points max, nifty stocks. 8. Psychology, the real battlefield of intraday trading. The largest part of Ashwani's book is psychology. He says, most traders lose not because they don't know charts, but because they don't know themselves. Intraday psychology mistakes. 1. Fear. 2. Greed. 3. Overconfidence. 4. Revenge trading. 5. Early exit in profit. 6. Late exit in loss. 7. Overthinking. 8. Impulsive trades. Ashwani's biggest psychological mantra: trade the chart, not your emotions. Your feelings are useless. Price is the only truth. 9. When not to trade. Ashwani's most important rule. Ashwani says, good traders know when to trade. Great traders know when not to trade. Avoid trading when there is no clear direction in the market, when the index is sideways, when volume is low, noontime, 12 to 2 p.m., when a news event is pending, when you are emotional, when you are trying to recover a loss. The biggest skill in intraday is sit on your hands. Friends, now we have reached that part of Ashwani Gujral's trading philosophy, which truly makes a trader the hunter of the market, not the prey. This section is about entry plus exit mastery, trade management, risk control plus the swing and positional strategy mindset. Let's begin. Trading is a war, and you must fight smart. Ashwani says the market is a war, and in the battlefield, only the one who knows when to attack and when to retreat wins. The real secret to winning in trading is not entry, not exit, not even strategy. But the biggest secret is situational awareness, meaning, when is the market trending? When is it range-bound? When is a breakout fake? When are institutions accumulating? When are retail traders trapped? When will the pullback wait? When can the market suddenly reverse quickly? The estimate of all this is not given just by indicators. It is given by the pulse of market psychology plus price action. The winning trader's routine, Ashwani style. According to Ashwani Gujral, 80 to 90% of traders lose because they do not have a set routine. According to him, a successful trader's daily routine should be like this. 1. Before market open, preparation phase. Identify the trend on daily charts. Check sector-wise strength. Mark the high/low of the previous day. Note large gap ups and gap downs. A quick look at FIIDII data. Ashwani says, if you fail to prepare, you prepare to fail. 2. As soon as market opens, observation phase. Do not trade the first 15 to 20 minutes. Just watch. Which sector is strong? Where is the panic? Where is smart money taking entry? Is the Nifty/Bank Nifty structure stable or nervous? These 15 minutes can literally save your entire day's money. 3. Real trading window, 9:45 a.m. to 11:15 a.m. Ashwani's statement, the morning trend is the real trend. Catch it, and the day is yours. This time is the best because volatility is controlled, direction is already set, breakout/trend continuation remains strong. Institutions deploy their orders. The highest probability trades are found within this time frame. 4. Afternoon. Avoid zone. The market becomes unpredictable between 2 and 3 p.m. because option sellers make adjustments. Institutions manage EOD positions. The trend can suddenly break. Therefore, Ashwani says, be a trader, not a gambler. Trade when odds are in your favor. Position sizing plus risk formula, Ashwani's real technique. Ashwani's most famous risk rule is, never risk more than 1 to 2% per trade. Meaning, if you have 100,000 rupees capital, right pointing arrow, 1% equals 1,000 rupees risk per trade. This is the limit where, even after a loss, your account will not break in 50 to 100 trades. Ashwani Gujral's logic is, 5 losing trades, right pointing arrow only 5% down. 10 losing trades, right pointing arrow still manageable. A beginner's biggest mistake is one big loss, which wipes out 1 to 3 months of hard work. Therefore, he says, Avoid disaster. Trading is not about making money. It is about not losing it. The psychology that wins. Ride the winners, kill the losers fast. There are two things in trading. 1. Small losses. 2. Big profit. But beginners do the opposite. Big losses. Small profits. Ashwani's system is clear. Cut the loss as soon as you see it. Stop loss hit? Exit immediately. Without ego. His mantra. Hope is the biggest enemy of a trader, but ride the profitable trade. Don't exit early out of fear that the profit might vanish. Traders lose here the most. Trend trading. Ashwani's most simple yet powerful setup. His belief, trend is God. If the trend is understood, 80% of trading is easy. To identify the trend, they use 20 EMA, 50 EMA, price structure, HH/HL or LHLL. Volume confirmation. Ashwani's formula for trading in a trend. Higher high plus higher low right pointing arrow, BY dips. Lower high plus lower low right pointing arrow short rallies. Just simple. Trading against the trend, according to him. Suicide with full planning. Breakout and breakdown. Ashwani's real edge. Ashwani says, breakout is real only when volume spikes. Candles are strong, no long wicks. Panic should be visible in a breakdown. His most powerful line, breakouts without volume are traps. Avoid them like poison. Understand by looking at the market structure where institutions are taking part. Swing trading logic. Ashwani Gujral's master formula. Swing trades are the most profitable because risk is low, reward is high, stop loss is clear, time stress is low. Ashwani's formula for a swing trade. 1. Identify the trend, daily charts. Uptrend? Downtrend? 2. Wait for a pullback. The market never moves in a straight line. In an uptrend, a pullback should come to the 20 EMA or 50 EMA. A candle rejection should be visible. 3. Entry with confirmation. Break of pullback candle high equals buy. Break of pullback candle low equals short. 4. Exit. Book partial profit as soon as 2-to-1 reward is achieved. Keep trailing the rest. Emotional mastery. Ashwani's biggest lesson. Ashwani says, your mind is the real market. Charts are just mirrors. A trader must control their own mind. Greed, fear, overconfidence, revenge trading, FOMO. Impatience. The most dangerous is revenge trading. In an attempt to recover one loss, the entire account gets wiped out. Ashwani's advice. If you back-to-back lose 2 trades, stop trading immediately. This simple rule saves you from big losses. The professional trader mindset. Ashwani Gujral defines pro traders. Checkmark. They follow rules. Checkmark. They trade less. Checkmark. They focus on big trends. Checkmark. They don't react emotionally. Checkmark. They think like institutions. Checkmark. They understand market structure. Checkmark. They keep trading boring, simple, rule-based. His famous quote, keep trading boring, make life exciting. Key takeaways that will change your trading. 1. Every trade must be planned. 2. Stop loss is a must. 3. Risk per trade equals 1% max. 4. Trade with the trend. 5. Don't take a breakout without volume. 6. Don't do revenge trading on a losing day. 7. Follow a daily routine. 8. Trading every day is not necessary. 9. Patience equals profit. 10. Keep emotions out. Friends, I hope you have learned a lot from this deep, powerful, and knowledge-packed summary of Ashwani Gujral. Because truly, the real game of winning in trading is not of indicators but of mindset plus discipline plus risk management. And Ashwani Gujral teaches us exactly this. Understand the market, understand yourself, and then take the right action at the right opportunity. If you found this video even slightly valuable, if you felt that you learned something today that can change your trading, then friends, please like this video because it gives me the motivation to create such high-quality, deep videos. If you are not a part of our community, then subscribe to the channel because on this channel, we bring the essence of the best trading books, the knowledge that changes the direction of millions of traders, and the mindset that makes you stand out from the crowd. And yes, comment and tell us which point in this summary you found the most powerful. Was it risk management, or Ashwani Gujral's trend-following style, or his points on psychology? What do you want to learn? Price action? Swing trading? Breakout techniques? Or a detailed summary of another big trading book? I will bring the next video based on your demand. Friends, remember, only the one who learns, understands, and follows the rules earns money in the market. My best wishes are that your everyday be disciplined, focused, and profitable. See you in the next video with another powerful summary. Till then, trade smart, stay disciplined, and keep learning. Thanks for watching.